It's stock's biggest risk exposed. I'll show you why they may crash hard next week. I'm Steve Van Metre. Hit the like button if you're worried about another big move down in stocks. Drop a comment. I want to know what you're doing. Are you buying, selling, or on the sidelines? Because you're not going to believe what's coming next week and why it could be such bad news for the U.S. equity market. And this is why each and every Sunday we like to break down the technicals, momentum, and machine positioning of the broad equity, bond, currency, and commodity markets to help you make more money trading and investing. And speaking of making more money, my subscribers went long Hong Kong last month and are up 10% while the U.S. equity market burns. Want to trade the markets like a pro? Well, today's show is for you. Now, the question is what's coming next week? That's the consumer price index data. We get that Wednesday morning before markets open. And as you're about to see, it could set up a major move down in stocks because right now, one thing the equity markets don't like is higher inflation. And let me show you why. Because as we go back to the year 2000, what do we see? The tech stocks are on a roar. Inflation gets too hot, and next thing you know, it keeps printing big numbers, and the equity markets unwind. It happens again going into the global financial crisis. Stocks are on a roar. Everybody says they can only go higher, but what does go higher is inflation, and that sends stocks crashing down. And the odds that CPI is going to print hot, well, they're pretty good because over the last several weeks, what have we noticed? The U.S. dollar is headed lower. On top of that, what is the manufacturing sector telling us? That their input prices are rising and they're going to pass it on to consumers. The services sector even added on to that, saying they're being forced to give their employee raises and they're going to make consumers pay. And right now, one thing we do see is going to cost and cost big. That's the long position that many investors have in the equity market. Because as we turn to Goldman, what do we see? And while they've modeled CTAs long 137 billion of global equities, the bad news is they're going to be selling into next week. The other issue is we got the last week of corporate share buybacks before the blackout, and we already saw last week that they were big buyers of equities. The problem is what happens when markets still go down and there's no buybacks, on top of the fact that machines could be selling. Well, there could be a massive amount of downward pressure. And here you can see over the next week in a flat tape, we're looking at 48 billion of equities to sell. In a down tape, which we're seeing already, that could get even worse, 69 billion of global equities to sell. Let's take a look at these key pivot points for the S&P 500 because I want you to understand machine positioning. And when machines sell, they sell in big numbers, as you can see. We already passed the first pivot point right here. That drove the equity markets down. Buyers came in. They tried to push the market back up. They were very aggressive here, but the problem is machines continue to sell. They broke that midterm point. Now we saw a buyer step in on a very tactical move of the 200-day moving average. And particularly, you note the MACD and the RSI are near oversold levels looking to turn. What you're seeing here is retail investors betting big on a technical bounce. But if we see more selling, well, the worst case scenario is you could see on the CPI a massive drop. The risk is if it breaks that third level, you're going to see a monster flood of machine selling. It's going to hit the markets and there's going to be absolutely no turning back. But that's not the only factor we're facing here as we now start to look at global equities have saw the largest net selling since January 2024. But here's the interesting part. It's been entirely driven by short sales. So what we're seeing is retail investors, institutional investors, hedge funds, they're not selling last week. And that is very interesting. What we're seeing is people putting shorts on. They're buying insurance against a market downturn. The problem is if it keeps going, what you're going to find out is people are going to turn into major sellers. I'm going to show you the charts here in a bit of why I think that's happening. But let's take a look at what Bank of America had to say. They said, well, people were buying the dip and in a big way. Weekly flows, they saw 22.9 billion in stocks. Again, as people were hedging the downside risk. How about gold? $1 billion in inflows. Treasuries, the biggest outflow in 11 weeks. Emerging markets. This is the one the market said last week you should be buyers on. Saw the largest inflow in the past 3 months. But what is Bank of America doing? They're buyers of the long bond. That's the 30-year U.S. Treasury bond. Why are they doing that? They're saying the U.S. government session has started after 5-year fiscal binge plus Doge equals weak payrolls. And what does that mean? Higher savings rates for U.S. households as conviction and fiscal bailout ends. And Trump not going big on tariffs as political malpractice could allow for a second wave of inflation. And you tack on that the U.S. is now one bad payroll number away from a recession. Well, the challenge here is the big risk to the markets. As top of all those things is the consumer price index. Because why is that going to be such bad news for the equity markets? Because the reason stocks don't want higher prices is because they know consumers can't afford them. So if prices go up, consumer spending goes down, and next thing you know, equity markets are going to drop in a big way. But that's not keeping retail off the sidelines because they're still buying every dip. Here we can see, according to BofA, their private client equity holdings are still around 63%. Cash holdings are at 11%. So no major changes there. But let's talk about market breadth, because let's look at what's coming for the markets. There's a lot of risk here. But why are people buying this dip? Well, if you look at the percentage of S&P 500 stocks above their 50-day moving average, it's currently holding around 53%, and that's at a 2 standard deviation level. Now, if you look back over time, what you find out is these can be great buying opportunities. But the problem is when stocks start to enter a bear market, what you see is people run in and buy the dip. There's a little bit of pop in stocks, and then next thing you know, they sell off and big. And there's reasons why, because that means everybody else, like the machines, are selling here. But let's talk about momentum. It is negative. Now, how do we know that? The relative strength index is under 40. It's at 37. MACD's got a massive negative cross. But in terms of momentum, it's not just about the technicals, it's about the trend. Our Momentum Timer Pro adds a trend overlay to the momentum signals. It's saying 11 consecutive daily buy signals. Now, if you want to trade momentum and win, there's a simple solution. Jump on our Momentum Timer Pro report. There's links in the description below. There's a 30-day free trial. Now, here's the best part. If you like trading machine positioning, well, we do that too, but we run a historical overlay. So if you look at machine positioning on our fast algorithm, it's at max short. What it's telling us is machines should be sellers. And on our slow algorithm, what is it saying? That machines are likely to follow through with even more selling after that. So we give you the edge. Whichever way you want to trade, our subscribers are making a bundle, and you can too, my friends. Again, hit the links in the description below. Grab those coupon codes for a free 30-day free trial. Because right now we're seeing a technically oversold market. We look down here at the MACD, massive negative crossing down here. How about the RSI sitting right above oversold conditions? But what's the issue? When you see a market come down off of a big trend, as you see this trend here, as you go down, what happens is people that bought the dip here, they turn into sellers. And then you get to the next point, and these people, well, they turn into sellers. And then the market continues to go down until you get to another point where people bought the dip. And then what happens? They turn into sellers. And it's not that they specifically sell. A lot of them are holding stop levels. And once those stops trip, next thing you know, you see an absolute flood of selling hit the markets. So what we're seeing here in the trend and in the technicals is further selling. Let's talk about tech stocks, because again, we got one last week before we go into blackout. Huge problem because these tech companies are massive buyers of equities. What do we see? Same scenario. 52% of the NASDAQ above the 200-day moving average, seen right on a 2 standard deviation move. This is, again, a very technical point where people will buy. The problem is if the machines continue to sell, watch out below, because momentum is negative. Again, the RSI, just like the S&P, it's under 40 at 36. MACD, big negative cross. Momentum Timer Pro was all over this, telling our subscribers, if you were long, then if you were long the broad U.S. equity market, you need to be a seller for the last 11 days. Let's take a look. Our downside target at 471. Look at our machine positioning. Huge short opportunities. You want to trade the machines and win? Well, we're going to show you exactly how to do that, because when these signals flip, well, what it means is it's time to buy ahead of the machines. Let's take a look at where QQQ is at. See a similar story. You see people buying the dip here, and next thing you know, stocks are unwinding. Now they're trying to buy the 200-day moving average. It slipped below that on Thursday, slipped again on Friday, but again, the conviction was there. Buy this dip. The problem is the CPI report could lend stocks going in the other direction. What we are likely to see is Monday and Tuesday potentially go up, and then you watch when we see a CPI report drop on Wednesday morning. Watch the markets head down on hotter inflation. We know that's likely coming because, again, this is a very technical move of where buyers are at. You have oversold conditions on the RSI and the MACD. You've got the 200-day moving average, which is a long trend of support. Everything is telling us on a technical basis to buy, but on a fundamental basis, as we go into earnings, it's telling you maybe you want to be on the sidelines here. But how about the Russell 2000? 36% of it sitting above the 200-day moving average. That's a 3 standard deviation move, my friends, and people will be looking to buy. The problem is the Trump trade on small caps is over. There is no more Trump put. Momentum's negative here. How about the RSI? It's at 30. MACD's got a negative cross. You have 13 consecutive daily sell signals. This is looking bad. Machine positioning max short. Here we're seeing momentum on a 1-month window max out to the short side. What is that telling us? Well, there's going to be opportunity at some point point, but that opportunity isn't here yet because, again, we look at the Russell 2000. What happened here? There was a supply zone above. We warned this is where sellers were at. Sure enough, they were there. There was a battle here at the 6-month volume profile, but the sellers won. It came down right into a buy zone, and we know that because buyers were previously here. What happened? Those buyers, they turned into sellers. Now what's the issue? You have dip buyers here and here that are going to look to be sellers. There's a lot of risk here because if we zoom out to the 2-year chart, what you're seeing is the potential for small caps to drop all the way down here into this 185 zone. That's your next major area of support. Question is, will it get there or not? But here's the question for you, my friends. Are you concerned about markets heading lower? Hit the like button if you are. And again, drop a comment. I want to know what you're doing. Again, buying, selling on the sidelines. What are you doing? Or maybe you're hedging. Because remember this headline, WTI jumps to 70 as U.S. sanctions rekindle supply concerns. What did we tell you last week? Don't buy the energy sector. Sure enough, we nailed that trade. Look at this. Momentum was negative. We had 5 consecutive daily sell signals on our report. We've got max selling our machine positioning. Everything was setting up for this to go lower. In fact, we put our downside target at 82.51. Let's take a look at XLE because if you want to be bullish on energy, there's times and places to do it. And right now, you're seeing buyers stepping in here trying to come in and drive energy prices higher. Again, very tactical move. Now, how do we know that? Look out to the 1-year chart. What do you see? Buyers right at this level. The problem is weaker energy is a huge red flag. What's telling us this U.S. economy and the global economy are slowing down. So if we see energy drop further, it's not bullish at all. This is, again, a very tactical move. Where do we see energy actually getting down to? Well, 82.51. That would be where you really want to look to buy. How do you know that? Well, there was a lot of buyers way back here in 2023. So again, what you're seeing is just some people in the short term trying to buy. If we see the CPI print hot, well, guess what? You're going to see energy go down. But bank stocks, they were said to do well under Trump 2.0. We said not a chance because lower interest rates, not bullish for the banks at all. How about this? Momentum negative. RSI 36, MACD negative cross. Technically, this thing is on the oversold path. But what happens? You've got machines now selling on the fast algorithm, looking. If you see a further decline in price, they're going to be dumping the banks in a big way. Let's take a look at XLF. We warned you about this one. Don't buy it at the all-time highs. And sure enough, it's down here at the 100-day moving average. You see that in blue. Buyers are starting to step in. But what's the headwind? You've got the 6-month volume profile. So what is that telling you? This is where most of the shares over the last 6 months have been traded. And so what are you seeing here? People are trying to buy this dip and push into that 6-month zone. What happens if it doesn't hold? You're going to see them all selling because they're going to be looking to get out. A lot of bag holders up here. That's what the market's telling you. You get down to around 47. I think that's our next target. And that's where the last point of buyers is at. If that doesn't hold, you're looking at the 200-day moving average as support. Again, nothing in the charts is telling us strength here. And yet foreigners were dumping Brazil stocks after 290 billion rout. Well, we made money on Brazil. We may be looking to make it again. How about this? Momentum is negative, but what happened over those last week is machine positioning, particularly on Thursday and Friday, started to turn into buyers. And we know that's a bullish signal for our CTA Timer Pro Report subscribers. How about momentum? It hasn't flipped yet, but it could come soon. Let's take a look at Brazilian equities. And what do we see? Some opportunity potentially building here. And this is very interesting because you have what looks like a bottom. Remember, we've made money on this move here. But one thing you can note is when you get a cross of a moving average here, then green's a 50-day. Well, what you expect is it's going to come back and retest that. Well, it did. And if it holds it, which it didn't at first, but now it's holding it, and the moving average is rising, well, that's a bullish signal. Now, in the short term, it means we're looking at a retest of that downward trending 100-day moving average. But if we start to see a break over that volume profile line there, what that could set up is a move up here into 27. So we had a rise in momentum, a bit of a pullback, looking to make another move higher, my friends. That is a potential very bullish signal setting up in Brazil. But remember, the expert said you need to buy emerging markets. We said, well, maybe. Well, they may have been right. Let's take a look here because emerging markets and momentum is positive. The RSI is at 56. That's a good sign. MACD's got a negative cross, but we have validated this on Wednesday. Here you see Momentum Timer Pro said, yes, momentum is now heading higher. Upside target 45.66. We'll look at this in a moment. Downside target at 43. What do we see? Machine positioning looks like they were buyers there, but it was that switch in momentum that really made the change here. Let's take a look at the chart of EEM and see where it's possibly headed, because is this a bullish trend? Well, it held the 6-month volume profile, and you can see it was a battleground here for 3 trading days, then it jumped and it's holding up here. Yes, this is bullish. You see a 21-day moving average rising. It closed above its 50, 200, and 100-day moving average. Yes, upside target now 45.66. Does it break out from there? I'm not really sure, but the weaker dollar could help and a lot. But Bank of America said buy bonds. Well, was that move right? Let's take a look at TLT here, because momentum is positive. We got the RSI at 51, but we had a big pullback in price last week. MACD's got a negative cross, and back on January 31st, we told our subscribers to buy. And where are we at right now? We see machine positioning is fairly long here, and momentum is long over a 1-month period and starting to push into the 3-month window. Let's take a look at TLT. What do we see going on here? A 6-month volume profile acting as resistance, the 200-day moving average also acting as resistance. So we're getting a bit of a pullback right into the 21-day moving average, right into what looks like a 100-day moving average start to bottom. This is a potentially bullish signal where you could see TLT go sideways here for a few days. And on the CPI report, remember, inflation is not bullish for bonds, but if we're seeing growth slow down, what does the market know? That inflation is going to fall. Could see the CPI report be bond bullish after all, but there's a setup. It's looking like something good could come there. Look for some sideways action going into that CPI report. But everyone's bullish on gold. I want to know, where do you think gold is? Are you bullish on gold? Hit the like button. Drop a comment of your price target, because Goldman says 3,100. Does that mean it's time to sell? Well, momentum is positive. You got the RSI at 57. MACD's got a negative cross, but our momentum time process, yes, the trend is up, momentum's up, and it's got 5 daily consecutive buy signals. Machine positioning fairly neutral on the fast algorithm. Momentum just starting to turn back after a few sell signals. Let's take a look at gold. We haven't looked at it because we said if you're bullish on gold, you really ought to be bullish on the miners. And what do we see here? Just a little bit of a pullback off that all-time high. But let's talk about the miners here, because if you're bullish on gold, the leverage is in the miners. Let's see what the charts say here, because momentum's positive. You got the RSI at 59. MACD's got a negative cross, 3 consecutive daily buy signals. Upside target 44.22. Now, is that in the cards? Let's take a look, because I think it could be here. And how do we know that? Well, you've got the 6-month volume profile acting to support. You see price came down to the 100-day moving average, held it. You see the 50-day here is rising. You've got support underneath at the 6-month line. What does that tell you? Upside target 44.22. So if you're bullish on gold, you may want to take a flyer on the miners. How about wheat? As we look at some commodity play here, momentum's negative, but we made money trading wheat. The RSI is at 41. That's not looking positive here. Trend is down, 8 consecutive daily sell signals. Machines back shorting commodities, but if there's a trade deal, could that be bullish for some of these soft commodities? You bet it can. And where is it sitting? Right under a 6-month volume profile. So what would you like to see as a trade here? Well, you want to see momentum turn. It's looking like it's trying to bottom here. You see very clearly Wednesday, Thursday, and Friday there were buyers. What you want to see is a close over the 6-month volume profile. If you get that, you're looking at a retest up here of around 516. It could be a big trade. This is one you want to watch. Our subscribers, of course, will be all over that. Now, remember, we said the dollar likely to go down. Well, let's take a look at the Invesco Dollar Bullish ETF UUP. Momentum's negative. The RSI, well, that's not in bullish. Momentum's negative is validated by the RSI at 30. MACD negative cross, 23 consecutive daily sell signals. Remember, this was a big move to the upside, and we said it was going to come down. Machine positioning max short across the board. Momentum max short over the 1-month window. If the dollar turns, there could be opportunities here. Of course, our subscribers will be the first to know, and you can too. Grab those links in the description below, because what do we see? An oversold dollar, but the problem is people think the dollar is going a lot lower, and we do too. Where's support for that? Well, it's down here at 28. My friends, that could be the catalyst you're looking for to drive gold higher, perhaps some of those soft commodities as well. So you can see, even though the broad equity market isn't looking too bullish, there's definitely opportunities potentially in bonds, soft commodities, and metals here, looking to set up what could be some opportunities as we go into that CPI report. But remember, if it comes in hot, look for equity prices to sell. And the question we have is, when does retail turn from buyers to sellers? Well, then if that happens, watch out below. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.